Hi friends, welcome back to Financial Hacker. If you are new to this channel, please subscribe to the channel and click the bell icon for the latest updates. Today we will discuss about PowerGrid InvIT IPO, which is going to hit the capital markets on 29th of this month. It is owned by PowerGrid Corporation of India, which is scheduled a Maharatna public sector enterprise of Government of India, which was incorporated on 23rd October 1989 under the Companies Act 1956. PowerGrid is a listed company with 51.34% holding of Government of India, and the balance is held by institutional investors and public, and is the central transmission utility of the country, responsible for planning, coordination and development of interstate transmission system. PowerGrid InvIT was formed on September 14, 2020 as an irrevocable trust under the provisions of Indian Trust Act 1882. This will be the first infrastructure investment trust in the country to be floated by a public sector company, and this is the third InvIT to be listed on the Indian Stock Exchange after IRB InvIT and IndiGrid InvIT. State-run transmission utility PowerGrid will kick off monetization of assets of public sector units with this IPO on Thursday with a price band of Rs 99 to 100 per unit. The offer consists of a fresh issue of over 4,993 crore and an offer for sale of more than 2,741 crore by existing unit holders. In this video, we will discuss the detailed review of the IPO, whether we should apply or not, IPO details, financials, strengths and weakness, etc. For better understanding, I request you guys to watch the video till the end. This is CA Kvn Mahesh and let's get started. So, what are InvITs? InvITs are trusts registered with the SEBI. These InvITs can hold the operational infrastructure projects of sponsors with long concession periods and stable cash flows. Once registered with SEBI, these InvITs can raise funds via public or private placement and issue units to the investors. In return, investors obtain a share of annual distribution of dividends and interests. What to expect from this InvIT? Monetizing 5 tariff-based competitive bidding assets valued at around 7,164 crores held in existing special purpose vehicles. The InvIT was proposed by the government as an alternative fundraising route for state-owned companies to manage their funding requirements without having to depend on government support. Some of the proceeds for the sale will go towards PGCIL, which will be able to use the money for dividends or capex on more transmission lines. PowerGrid InvIT has been set up to own, construct, operate, maintain and invest as an infrastructure investment trust as permissible in terms of InvIT regulations, including power transmission assets in India. They were registered with SEBI as an InvIT on January 7, 2021. The key parties involved in any InvIT are sponsors, trustee, investment manager, project manager and unit holders. The sponsor and project manager for PowerGrid InvIT is PGCIL, that is PowerGrid Corporation of India Limited, which is CPSE under the Ministry of Power, Government of India. PGCIL is the country's largest power transmission company. The investment manager for this InvIT is POWERGRID Unchahar Transmission Limited, a wholly owned subsidiary of PGCIL. It is responsible for managing the InvIT, the initial portfolio assets, as well as undertaking investment decisions relating to its assets. The trustee to the InvIT is IDBI Trusteeship Services Limited, which is a SEBI registered debenture trustee. This trustee is responsible for ensuring that its business activities and investment policies comply with the provisions of the InvIT regulations and monitoring the activities of investment manager and the project manager. The initial portfolio assets, that is IPAs of the trust, consists of 5 power transmission projects located across 5 states of India. They are PowerGrid Vizag Transmission Limited, PowerGrid Kala AMB Transmission Limited, PowerGrid Parli Transmission Limited, PowerGrid Varora Transmission Limited and PowerGrid Jabalpur Transmission Limited. The projects are made up of 11 transmission lines with a total circuit length of 3,698 kilometers and 3 substations with 6,630 megavolt ampere transformation capacity and 1,955.66 kilometers of optical ground wire. The sponsor, that is PGCIL, presently holds 100% of the equity shareholding of these 5 IPAs and propose to transfer certain portion of the trust in exchange for units of the trust. Key points of the initial portfolio assets, that is special purpose vehicles, are These IPAs were awarded to the PGCIL under the tariff-based competitive bidding mechanism on a build, own, operate and maintain basis with a long-term transmission service agreements of 35 years from the commercial operation date. The average remaining term of the TCS is over 32 years. By carrying out the required renovation works, the usable life of the transmission assets can be extended up to 50 years, and upon expiry of them, PG InvIT can apply to the regulators for renewal if it is not unilaterally extended. The transmission charges being contracted for 35 years result in minimum price risk arising from transmission charge resetting, which provides stability, consistent cash flows, and long-term visibility. The IPAS will receive transmission charges on the basis of availability, including outage due to a force majeure event, irrespective of the quantum of power transmitted to the system. Maintaining annual availability in excess of 98% gives the right to claim incentives under the terms of the respective transmission service agreements, and each of the IPAs has consistently achieved annual average availability of more than 98% and earned incentives. You can see over here various incentives earned by these 5 IPAs. Transmission charges are typically billed, collected and distributed by the Central Transmission Utility, that is PGCIL, from the distribution companies, and the proceeds are distributed proportionately to all IPAs. PG InvIT is coming out with a maiden InvITs issue worth Rs 7,735 crore, consisting of fresh issue of Rs 4,993.48 crore and offer for sale of Rs 2,741.51 crore with a price band of Rs 99 to 100 per unit. The object of the issue is to utilize the issue proceeds for providing loans to the initial portfolio assets for repayment or prepayment of debts availed by them and balance for general corporate purpose. You can see here the outstanding principal amount of the initial portfolio assets as on 31st March 2021. Investors can bid for one lot comprising of 1,100 units, translating an investment of 1,10,000 rupees. The trust has set the subscription limits as not more than 75% of the issue for institutional investors and a minimum of 25% for non-institutional bidders consisting of high net worth individuals and retail investors. The allotment will take place on 10th May 2021 and refunds to those who fail to get the allotments and credit of units to the demat accounts of the lucky bidders will take place on 11th May 2021. Post allotment, units will be listed on both Bombay Stock Exchange on National Stock Exchange tentatively on 17th of May 2021. ICICI Securities Limited, Axis Capital Limited, Edelweiss Financial Services Limited and HSBC Securities and Capital Markets India Private Limited are the book running lead managers to the public issue. And the registrar to the issue is Kvn Technologies Private Limited. The 4 book running lead managers associated with the offer have handled 36 public issues in the past 3 fiscals, including the current financial year, out of which 16 issues closed below the issue price on the listing date. That means more than 50% of the issues handled by them have provided listing gains to the investors. Revenue from operations for the IPAs include transmission charges and incentives for higher availability, that is more than 98%. You can see over here revenue from operations of these 5 IPAs for the fiscals 2018 to 2020 and for the period 9 months ended December 2020. Revenue has been increased from 343.57 crores in fiscal 2018 to 1324.29 crores for fiscal 2020, and they have posted a decent revenue of 992.28 crores for the 9 months period ended December 2020. Also, profit after tax has shown a positive growth from 114.13 crores in 2018 to 378.83 crores in 2020, and for the 9 months ended December 2020, they have posted a profit after tax of 337.14 crores. If you see on the face of the financials, trust seems to be fundamentally strong as they are able to maintain profit after tax percentage in and around 30% over all the 3 years. And the positive note to be considered is that long-term debt to equity has been reduced from 10.41 times in 2018 to 3.36 times for the 9 months ended December 2020. Also, highest credit rating AAA has been awarded by 3 credit rating agencies, namely ICRA, CARE and CRISIL, is a added advantage to the InvIT for raising additional debt at a competitive price, which in turn results lesser finance costs. PowerGrid InvIT can be compared with listed PEET's IndiGrid Trust, which is sponsored by KKR and Sterlite Power. The NAV of the trust as on 31st December 2020 was 113.46 per unit, and now it is trading at a premium of 15.41%. However, net asset value per unit of PG InvIT is currently not ascertainable, and accordingly, investors will not be able to compare the company with the listed industry peers. Strong lineage and support from the sponsor and the project manager. The manager of this InvIT is PowerGrid, which has an excellent track record of serving this country's power need, and it is a well-managed PSU. As of August 31st, 2020, their sponsor's share in India's cumulative inter-regional power transfer capacity was more than 85%. Consistent and stable cash flows from assets with long-term visibility and low country party risks. Consistent and stable cash flows from assets with long-term visibility and low counterparty risks. The transmission assets in which unit holders will invest money has life of 35 years, which can be extended to 50 years. So there is a clear visibility of cash flows. And the company has a strong financial position, also well-established regulatory framework and government support. Strategic and critical nature of power transmission infrastructure with low risk of emergence of alternative transmission infrastructure. Skilled and experienced investment manager having strong corporate governance philosophy are the competitive strengths for this company. Transmission charges under the TSAs are generally fixed. They may not be able to offset the increase in operation and maintenance costs. This may impact its business and financial condition. Unlike other companies' IPOs, where minimum investment will be around 15,000, retail investors need to invest 1,10,000 in this InvIT IPO. Company intends to distribute at least 90% of the net cash available for distribution to its unit holders once at least every quarter in every financial year. However, there is no guaranteed income, and such income can fluctuate with various risk factors indicated in the prospectus. The biggest con is the company has not disclosed NAV value of the assets, so it is very difficult to calculate whether the price band of 99 to 100 is cheaper or costlier than listed InvIT of Sterlite Power, that is IndiGrid. We pay electricity bills to DISCOMs, that is distribution companies. They in turn pays to PGCIL, and then PowerGrid finally pays to the different transmission lines operated by public and private companies. This means if the distribution companies fails to pay the dues to the PowerGrid, then delay in payment to transmission lines will happen, and which ultimately delays the dividend to unit holders of the InvIT. Contingent liabilities. Company has certain contingent liabilities which, if materialized, may adversely affect the results of operation, financial condition and cash flows. On a closing note, here are the key points to be considered before subscribing to the issue. The IPS will have consistent and stable cash flows from assets with long-term visibility and low counterparty risks. And it has highest credit rating. AAA has been awarded by 3 credit rating agencies, is an added advantage to the InvIT for raising additional debt at a competitive price. Also, interest and dividends received by the trust from these IPAs are exempt from tax as per Section 10(23) FC of the Income Tax Act. Also, company intends to distribute at least 90% of the net cash available for distribution to its unit holders once at least every quarter in every financial year. Means investors can get regular income every quarter. Also, as per Section 10(23) of D of the Income Tax Act, distributions made by the trust will be exempt from tax in the hands of unit holders. While we cannot say anything about listing gains in the short term, investors may or may not see gains. High risk investors with medium to long term perspective can invest in such IPOs, will provide regular income by way of distribution of available surplus. We strongly advise you to make proper research before making any significant investment decisions. So friends, what do you think about this IPO? PowerGrid InvIT is good or bad? Are you willing to invest? Do mention in the comments box. If you like our IPO analysis, please share it with your friends and family. And also don't forget to subscribe to the channel Financial Hacker and click the bell icon for the latest updates. Thank you guys. See you in the next video.